Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, January 12th. Well, Wall Street's main indexes are higher so far today as strong December retail sales data drove gains in consumer stocks and bank results pushed up the financial sector. Amazon rose 1.3% and provided the biggest boost to the S&P and the Nasdaq. JP Morgan Chase rose 0.5% in choppy trading after the biggest U.S. bank by assets reported profits that beat estimates, benefiting from higher interest rates and loan growth. Wells Fargo fell 0.7% as the bank set aside more money in fourth quarter to cover expenses related to probes into its mortgage and sales practices. And on that note, let's move into three charts that will give us some insight into the weeks to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. Now, when I captured this chart today, the SPY was making yet another all-time intraday high at $277.81. That's about $27.78 on the S&P 500 itself. Okay, this is tons of fun, but we're getting really overbought here. As you can see, the SPY is trading at quite a premium to its 20-day moving average, the red line, which is coming in here at $269.97. The 50-day moving average, which is coming in right now at $264.57, of course above this trend line that I have drawn, and naturally above the black line, the 200-day moving average, which is coming in at $249 and change. Now, if we look down here to our oscillator, our overbought, oversold indicator, the 14-day RSI, we can see that the RSI now is above the 70 line. The 70 line on the relative strength index means that whatever you're measuring, if the line gets above that, then that asset is overbought. The SPY has been overbought now for about most of January. I'm kind of impressed here as it's certainly moved above the overbought position it had in October. The RSI is above that. However, please know that what I call this zone is the too much chocolate zone. If you eat one or two chocolates out of a box, that's good, it's delicious, you feel good, and all is well. If you eat the whole entire box of chocolates many times, we might become pretty sick from doing that and have to lay down. At this point here, the SPY, and there's no reason it can't keep going higher, but to me this is a little too much chocolate zone that we're in now, especially on a short-term basis, as the RSI, again, is very overbought. As well, you may note that the SPY is trading higher here on very low volume, and it's lower than usual this morning. Of course, it's this is around noon, so volume is only half charted, but it's still a very low volume day. New highs on low volume many times mean that we are due at some place here for a little pullback. Of course, we're going into the heaviest part of earnings season in the next 2 to 3 weeks. So for that, you're going to want to fasten your seatbelts and get ready for some excitement. That tends to toss the market around a little bit. Okay, and know here, please, that the SPY does have support here coming in at the 20-day moving average at about 270. We have more coming in here at 266, 267, and potentially more coming in here right around the 264, 265 zone, where we have the 50-day moving average and the trend line as well. So look for a little more excitement next week. I am still trading here. My positions all have very firm stops on them, and I am still peeling some profits off right here. I'm anxious to see what will happen in the through earnings season and the weeks after that. I'd like to have some cash on hand, and I will have for upcoming opportunities. And now let's go on to a daily chart of the PowerShares QQQ as symbol QQQ. This is the exchange traded fund that closely follows our NASDAQ 100 index, very important index. As I told you before, in Tony's Market Club, we watch the QQQ as a representative, certainly a major index, the NASDAQ 100, and yes, the NASDAQ Composite, which runs close to it. In the QQQ, the biggest components are the likes of Amazon, Facebook, Microsoft, Intel, and Apple. And despite Facebook's drawdown today, Amazon, as I told you earlier, is pushing it up, and the QQQ is trading at yet another all-time high, as is all the major indexes. The Qs are trading today, when I captured this chart, at $164.27, moving up in a pretty dramatic up move here, similar to the SPYs. All is well right now, but again, we're getting a little bit into the too much chocolate zone here. The Qs, the RSI is overbought, is trading over 70. May have some more room to go here as we come into the next week. Of course, this is the index or the ETF that will take some pummeling or maybe get pushed higher as the big growth stocks or companies, I should say, start announcing their earnings. I suspect here that sometime in the next 2 or 3 weeks we could see a pullback here as we're getting a little rich. The movers and shakers, again, will move the Q around during earnings season depending on whether those announcements are positive or negative. We have near-term support here at price and the 20-day moving average at about $159, and then we have more coming in here at 156, 155, where again the 50-day moving average and price support comes in. Okay, let's look at a chart now that I'm not sure we've ever looked at before. As I've gone through the sectors and industry groups and their ETFs, I found that most are very, very overbought. Most are at a position where I certainly would wait for a pullback to buy. But I did run into, and I like, the First Trust Water ETF, symbol FIW. It has 36 holdings. The top components are Pentair, Danaher, Roper Technologies, A.O. Smith, IDEX Corporation. Many folks believe that in the future, and maybe sooner than that water itself will become an extremely important commodity. And of course, this exchange-traded fund focuses on water companies, actually the worldwide. Since it made its lows back here, nearby lows in August at 41.72, the FIW moved back up above its 20 and 50-day moving average, moved in a nice uptrend, then curled back to its 20-day moving average, then started up again, walking up its 50-day moving average, which it's presently doing right now. This ETF looks reasonable here. I'm a big fan of water companies because, again, I think it's going to become a more and more important commodity in the future. It's getting a little extra love here, I've noticed, in the volume arena. It's a little more conservative than a lot of your other ETFs, but again, they're soaring so high, I don't want to get into them right now. The FIW is positive here. Looks like it might have more room to run if the market remains positive in the coming week. I might add shares here of the FIW to my portfolio. Today when I captured this chart, it was trading at $49.57, right at its all-time highs as well, but again, a little more conservative. As always, if I do enter this position, depending on what the market's doing next week, but if this is positive, if the FIW and the market's positive, I will, once I get in, as always, consider a close below the 50-day moving average as my protective stop and my exit point. So keep an eye on the FIW in the coming week. It may be something that turns out to be a really good idea. And now on to this coming week's economic reports, but first, please know that we are offering our popular training either online or on DVD format for a huge 35% discount right now. The market will become more volatile this year, I know that for sure, and this is the perfect time to learn how to handle that volatility successfully and increase your gains in the market. The complete step-by-step training offered by our flagship product, the 7 Steps to Successful Trading. This ensures you raise your skill set to become the confident, profitable trader you've always wanted to be. This gives you a step-by-step process. And it's not hard to do. Just simply click on the link below to find out more and receive your 35% discount. And now on to next week's economic reports. On Monday, not much going on. Tuesday, we have Empire Manufacturing. Wednesday, we have crude inventories. Thursday, we have building permits, housing starts, jobless claims, Philly Fed, and our usual nat gas industry inventories. And on Friday, not much going on. Please remember, if you want to learn how to trade and invest profitably on a consistent basis, you need a certain level of training. You can easily and quickly learn what you need to know with Gordon Scott and I in 7 Steps to Successful Trading. Plus, we're offering a 30-day guarantee. Just click on the link below and please check it out now because this sale ends in a couple of days. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.